Something absolutely massive is happening behind the scenes of the XRP ledger. While the general market has been looking completely boring, stuck in weeks of sideways movement and consolidation, the on-chain data is telling a completely different story. A well-known crypto pundit named Saif Crypto just dropped a bombshell observation using sentiment data, revealing that over 4,300 brand new XRP wallets were created in a single 24-hour window. So let me repeat that: 4,300 new participants or massive capital entities just set up shop on the ledger in just one day. When you see a massive spike in user growth while the price is just crickets, that is what I call a hidden bullish divergence in adoption. The general public usually only buys when a token is pumping and hitting all-time highs. But right now, people are quietly flooding onto the XRP ledger while nobody is paying attention. So to me, this screams accumulation by smart money who are trying to get ahead of whatever major market shift is coming next. This isn't the first time we have seen this kind of massive on-chain movement this year either. If we look back at the historical sentiment metrics from earlier this spring, specifically on March 19th, the network experienced an even crazier explosion where over 12,000 new wallets were generated in a single day. In my own opinion, these are not random occurrences. Network growth like this is historically one of the earliest and most reliable leading indicators of a macroeconomic market reversal. When people are actively building infrastructure and opening accounts, it means they are preparing to move forward. You don't buy a wallet just to look at it. You buy it because you are planning to deploy capital. All right. So our very first question right here is, could a major crypto market rotation be underway right now? Right? Let's just highlight this keyword. The timing of this on-chain surge is incredibly interesting, especially when you look at what is happening with the rest of the crypto ecosystem. Right now, a lot of community accounts like X Finance Bull Academy are pointing out a very strange contrast in the markets. We are seeing massive institutional ETF outflows from other major digital assets, yet the organic wallet growth on the XRP ledger continues to steadily climb. In my opinion, this confirms that the long-awaited market rotation is starting to feel very real. Capital never truly leaves the crypto space permanently. It simply rotates into assets that offer better utility, clearer regulatory status, and real-world adoption pathways. As other assets face seasonal stagnation, the XRP ledger is absorbing that curiosity and user base. This is exactly how massive macro bottoms are formed before the next leg up. But it isn't just retail investors or standard institutional funds that might be causing this sudden rush of 4,300 wallets in a day. Other community participants like Dinari DFI right here are introducing a fascinating concept regarding the future of automated investing and Web3 integration. They note that the entire financial industry is rapidly transitioning into a world where autonomous AI agents and automated algorithmic systems are managing multi-million-dollar portfolios far more efficiently than standard human traders. So in my own opinion, think about the implications of that for a second. An automated system does not trade based on emotions or hype. It looks purely at transaction speeds, cost efficiency, and settlement reliability. If automated portfolio managers are beginning to scale up their operations globally, the XRP Ledger is the most logical ecosystem for them to interact with. A single enterprise deploying an autonomous network could easily trigger thousands of wallet creations within 24-hour cycle to distribute liquidity. So, why does on-chain adoption predict future market success? Let's just highlight this part, right? A prominent community members like Eve Cruz have pointed out this kind of aggressive network expansion is highly impressive and historically precedes notable upward price movements. When you focus entirely on the daily price charts, it is very easy to get bored or get shaken out by short-term volatility. But on-chain metrics give us the ultimate reality check because they track actual human and machine participation. In my opinion, I always say follow the data, not the drama. Hype on social media can be fake, but the creation of 4,300 verifiable cryptographic wallets on a public ledger cannot be fake. It is absolute proof of growing utility. Whether this network growth is being driven by anticipation of upcoming regulatory milestones, central bank pilot programs, or major automated Web3 applications, the foundation is being poured right now. While the network metrics alone cannot guarantee an immediate price lift off tomorrow morning, history shows us that price almost always eventually catches up to network adoption. The fuse is being lit on the ledger, and the smart money is quietly finding its seat before the rest of the world wakes up to the news. So in my own opinion, the game plan remains completely unchanged. I am watching these on-chain active addresses spikes very carefully because they tell us exactly when the engine is warming up. So we need to stay patient, ignore the sideways noise, and remember that real wealth is built by watching what the network does, not the crowd, not what the crowd says. Right? And this finally ends our video. Thank you very much for watching and see you on the next one.